Hello, welcome to AQA Accounting. In this video, I'll be going through a Section B question, and this will be from the Paper 2 2021 past paper. So let's get started. So Section B, question number 14 is the question, and if we scroll to the question, let's have a look and see what it is. So it's 14 marks, which is fairly typical for Section B question. And the question is asking us to, if you have a look at the template, it's obviously a cash and profit question, okay, which can be tested in paper 2. So all we're going to do is go through the adjustments, reflect upon how they affect cash, meaning the bank account, and how it affects profit for the year, put the adjustments in. Profit goes up or down, bank goes up or down, and then we revise the figures at the end. Okay, so let's have a look at the question. So that's the question over there. Okay, question 14, section B. So what I'm going to do first is just very quickly, just some notes on the question. Okay, so we've got profit, we've got bank, we've got 1 to 5, so we've got 1, 2, 3, 4, 5, and then we have the final figures at the end, and we've got the draft figures at the start. Okay, so if you know your paper 1 content well, meaning sole trader statements, adjustments, then you should be relatively fine with this question. It's a straightforward question, something that I actually quite enjoy working through. Is paying attention to detail, and that's the key in this question. Okay, so let's get started. So it mentions the draft profit is 58,32320, 58,320, and the bank is overdrawn with 14,784, and that's an overdraft there. Okay, we'll work through each one, put the adjustments into the table. Something to remember is year end is 0621. So year end 0621. That's going to be important for some adjustments. Okay, number 1. I'll do a sort of a commentary as I'm going through each one. So number 1, trade payables were paid after taking a discount of 4%. What does it mean? We paid trade payables 720, and that money is going to go out of the bank, easy. But when we paid them, or should I say before we paid them, we took 4% discount off. Okay, now that affects the bank. Question is, what affects profit? Now you should know if you pay trade payables and you benefit from a discount. This is discount received, and discount received comes in IS, income statement, as a form of other income. So this is equivalent to 96%. So workings 1 is 720 divided by 96. Why? Because that would have been, the full amount would have been 100%. We took 4% off. That leaves us with 96%. So that's our 96% value. 720 divided by 96 times 100. The full amount we owed was 750. And that gives us our difference. Our difference is £30. That's going to increase our profit. Okay, so just to clarify, this is the 96% value. We work out the 100% value by dividing by 96, because that's 4. Okay, if that was 5, then we divided by 95. If that was 8, we divided by 92. Okay, and our discount that we took off was 30 quid. That's going to be our profit. Number 2. Insurance of 2325 was paid for the 6 months ending October. So we paid 2325. That's going to affect our bank. Okay. However, we paid up to October. 6 months up to October. Now you have to work backwards. Now October is normally October's month 10. Yeah, October's month 10. So you have to work back to month 4. Okay, let's just check this. Okay. So April, May, June, July, August, sorry, month 5, May. May, June, July, August, September, October. Okay, so that's May, June, July, August, September, October. So this workings 2 is from May to October. Year end is June. So we basically paid for May, we paid for June. That's our year end. Anything after is outside of our year end. This is outside of year end. Now, because we paid that amount, that affects the bank. However, only 2 months fall in our year end. So this will affect our expenses, which means expenses go up, profit goes down. Let's work out 2325 divided by 6 times by 2. Only 2 months affect our year end. 2325 divided by 6 times by 2 is 775. Okay, so our profit's going to go down by 775. And the reason why we don't work with the other 4 months, you might be thinking, what do you do about the other 4 months? Well, you should hopefully know accruals and prepayments at this stage, but that's obviously a prepayment that will be accounted for next year. This we account for this year, the other 4 months we account for next year. Let's move on. Okay, Karim took goods. He took goods. Okay, he never took cash, he took goods, 470. So if I take something for myself, for my own business, then bank is not going to be affected. So that's a trick. There's no effect there. Don't be fooled. You don't have to put something in every single box. The other thing is, how does him taking goods affect profit? So you should know, if you take something for yourself, then purchases goes down, meaning cost of sales will go down. Now, if your costs go down, if purchases go down, cost goes down, and if cost goes down, profit will go up by 470. Okay. Number 4. On the 1st of May 2021, look at the date, May, year end is June. A van costing 2640, okay, was purchased. The purchase was financed by a 4-year interest-free, no interest. The monthly repayment started, pay attention to the date, started 1st of June. So we bought it in May, but the next month we started the repayment. 30% straight line, month by month. Okay, so the first question is, what's going to affect bank? Now, we're not putting 2640 in there because we never paid the whole amount in one go. What did we pay in as far as year end is concerned? Well, the payment started in June, which is the year end month. So we only made one payment. Okay, so we do 2640 divided by 4 years. We are splitting it over 4 years, meaning 48 months. Divided by 48 months, which is £430 per month. This is what has affected the bank. £430 goes out of the bank. Next part, how does it affect profit? So obviously depreciation is an expense and that affects our profit, meaning profit goes down. So in terms of W5, which is the 2640, we are going to do times by 0.3. And then we're going to times that by, we had the vehicle for 2 months. We bought it in May, so month of May, depreciation. Month of June, depreciation. 2 months, times by 2 over 12. Times by 0.3, divided by 12 times by 2, 1032. And that's our depreciation, 1032. Okay. Obviously, when you buy a vehicle, you cannot put the whole amount in. You have to split it across the years of usage. Okay, so 2640, we've got to split it across the years, divided by 4 years. The first year, we only had it 2 months because it's month by month. So times by 2 over 12. Okay, working 6, there's the next one. Okay, this one here, there's also, I think, sort of information overload. Some people, they might get confused by this. Okay, so let's have a read. There were credit sales of 1720. Trade receivables of 3910 were received into the bank. Automatically, you're thinking, what's going on there? They got credit sales. Then they've got trade receivables, money's coming in, and then this included a check from a customer that had been declined, and that was treated as irrecoverable debt. So what should you do in this situation? Just do one thing at a time. The first one is credit sales. Stop. How does that affect bank? If you sold something on credit, is money going to come into the bank? The answer is no, because it's on credit. The money will come in next month maybe. Okay, so how does that affect profit then? Well, if sales go up, profit goes up. So working six, just going to make a note here. Profit goes up by 1720. And the bank, there's no change. This is part 1 to number 5. Let's move on. Trade receivables of 310 were received into the bank. We received money from customers. Okay, so that means bank is going to go up. So we're going to add 3910. How does that affect profit? Well, if customers pay us, it doesn't affect our profit. Why not? Because it would have affected our profit when we had the sale, the initial agreement. Okay, so at the point of sale, profit is affected. At the point of payment, profit is not affected. You can't affect profit twice. Profit is only affected one time. Okay, so this is an example where the credit sales affects profit, but not bank. But the payment affects bank and not profit. Okay, so that's that done there. This included a check. What included? This 3910 included a check from a customer that has been declined. So a customer's given us money, there it is, but then the check's been declined, so we have to take the check out. Okay. Karim has decided to treat this meaning the declined check, as an irrecoverable debt. Now that is an expense, which means expenses go up, profit goes down. Okay, so in terms of number 5, quick recap, we sold goods 1720, profit goes up, bank is not affected because it had no money coming into the bank. 3910, bank goes up, profit, no effect to it. That should be over there actually. I'm going to move that to the next line just to keep it simple. Okay, 3910, bank goes up, no effect to profit, and the check that had been declined, obviously that has to be reversed because that came in and then it bounced, so it went back out. And then the last one is the 135 is treated as an incurable debt. So there's a lot going on here. We're going to do the overall summary and we're going to put it in. So 1720 goes up, then down. 1720 minus 135 is 1585. That's the overall. Okay. And then we've got 3910 going in and 135 going out. 3910 minus 135 is 3775. So that can go up and that can go up. 3775 and 1585. Okay, let's do a final tally. 58320 plus 30 minus 775 plus 470 minus 1032 plus 1585. 58. Always check your figures at the end, double check them. All it takes is for you to mix a number up and you lose the mark. 58320 plus 30 minus 775 plus 470 minus 1032 plus 1585. 58598. Okay, I'll double check that twice and I'm happy. The next one is negative 14784 negative minus 720 minus 2325 minus 430 plus 3775, and I have minus 14484, and I'm going to double check that again. Okay, and that's come up the same figure. Okay, so that's basically a run through of all the 5 adjustments, and yeah, just a walk through each one. Again, just a quick overview. If you have a minute or two, then you can sort of just keep watching. If you're happy and you know what you're doing, then feel free to move on. But in terms of obviously AQA, where are the challenges in this question? Challenge number 1 is the 4%. Students may not know what to do with this. You have to remember that the 4% is part of profit. It is part of discounts received, which increases profit. That's where the challenge is there. And the second challenge is students don't know. What they'll do is they'll calculate 4% of that. No, this is equivalent to, this is the discounted payment, meaning it's the discounted, meaning they took 4% off here. This is equivalent to 96. That's the challenge. Number two, some students will probably put the 2325 in profit. Nope, you only put the months that apply for year end. Anything after year end, that is accounted for next year, accruals concept. Number three, some people will probably think 470, I've got to put something in bank. No, you don't. You don't need to use bank. You may not even need to use profit. Okay, only use what you think you should use. So 470 does not affect bank. It does affect profit because of cost of sales. This one over here, again, they're trying to catch people out. Some people will probably work out 2 months of payments instead of one. Remember, the payment started in June, not May. Some people might think, oh, because the payment started in June, the depreciation starts from June. No, it doesn't. The depreciation starts when you bought it. Depreciation starts in May. Payments start in June. Okay, and some people might just do full 30%. They might not divide it by 12 times by 2. The last one is just trying to confuse you because of information overload. You should know credit sales does not affect bank. It only affects profit. And that you should know when a customer pays you, if they're a trade receivable customer, that affects bank. It does not affect profit. So one affects profit and not bank. The other affects bank and not profit. And then you've got to be aware of the the dishonor check and how that cancels out, and obviously the effect of that on profit overall. So I'll just quickly have a look, make sure the mark scheme is all correct with what I've done and vice versa, and yep, everything's all good. I'll just share that with you there so you can see. Okay, thank you very much for watching.